You're listening to financialradio.co.uk. My name's Giles McMullen, chatting to Bill Rook from Redmayne Bentley. Hi, Bill. We've got a few to look at today. The ongoing story of British Petroleum, BP. Let's have a look at that chart now.
Right, BP. What this week I've done is in a modified band system here we've got here. And with this system here, we've got a breakout, a breakdown in April, and at about £6. And really there's been no recovery, and there's excitement about where it's going to go until it goes above the turquoise band on the system. It's a short, and it's ideal situation to go short. Now, a lot of people would have preempted this and thought that because every time it goes below the band they'll buy it, because last time it did that in January, it went up again, but that's only in January. Now, the situation has changed dramatically now, with costs spiralling much higher, and we need to break above the turquoise line on this thing in order to stop the short. So it's remaining short on this share until the turquoise line is broken. So this modified acceleration band system is quite interesting. What I've got at the top there is what they call equivalent to the a directional movement indicator. It's the B indicator, which gives you the strength of the trend, and it doesn't know which way it's going. So you can see it's quite positive from February to April, and BP was in an upward trend, and suddenly it swung down dramatically as it broke to the bottom end, and now it's gone very strong again, so it's gone straight to the top again. So that's the highest strength that we can get there, I think, and it shows the trend is well and truly in the downtrend. The indicator below volume action suggests the short-term volume is very high as people are scrambling to trade in and out of the share. Certainly on the downside, it seems to be more coming in at the moment, as we can see from the chart. So down until we get to until the share price consolidates, until we get the bands narrowing, until we get the share price, until we get the price above the turquoise line, and we'll stay short there.
Okay, Bill, thank you very much for that. Let's have a look now at the next one, which, I think the Chinese market might be a good one to look at now.
Well, it's the second largest exchange in the world, this one now, and it's the second largest exchange in Asia, this one, the Shanghai Composite. So this basically, we had a bad spell in April, and this sort of led the way. You see it topping out in March and then falling back. Because now this market's meant to be leading the way of where the markets are going worldwide now, because it's quite a popular, quite well traded market now. And the stability that it gave last week around the 2,500 level has sort of led the world market to sort of reconsider their downward spiral. And this is the thinking anyway. Although the longer term trend by the MACD slipped into a negative state, which is not so good. Volume is a bit patchy there, it's cooling off a bit. The slopes on the market are cooling off a bit. So it's still tender as we go, but the slippage has stopped, or the hemorrhaging has stopped from the falls we've had in May. And we're sort of looking for some consolidation upside from here.
Thank you very much.
It's currently oversold, Giles. Yeah, sorry.
That's okay. Thank you very much for that, Bill. And let's have a look now at Hochschild. I know it's one we've been following for a while.
Yeah, this one, it's not performing as well as other shares are against the precious metals. I mean, looking at some of the others, we're 20 or 30% above the precious metal price, certainly with Sentiment and Fresnillo. But this one is lagging behind. And we change of management and organisational change thrown in here, and we've got the silver price, silver moving up a bit, and gold being very steady. And we look at the price action recently; it's been very much contained by that line, the blue line I've drawn on the chart there. So it's very much in a consolidation phase, and then it's narrowing. So ideal situation here, low volatility kicking in, and a little break above that line above the 290 level. So what I've drawn on there is another a target line of about 360, 350, 360. Not that, a medium size 3, sort of 340, 350 would be good enough for a short-term trade here. Volume has changed here. We can see the volume now is more positive. It's moved above its long-term trend. The moving averages are sort of arrowing in the right way now, blue at the bottom there. The MACD is positive. The stochastic suggesting it's slightly overbought at the moment, but it's still supported by good price action there. So I think we're looking upside there, support on the 290, resistance at the 290 there, and looking for about 360.
Okay, Bill. Thank you very much. That's an interesting one there. And I know you've been following it for a while. Now, Halfords.
Yeah, Halfords. What do I put here? Halfords. Yeah, it's a sort of. I suppose that people aren't changing their cars and they're hanging on to them now a bit longer because of the. If the recession is going to last a bit longer here, and I suppose with the government cutting its own its spending power within the next week or so, it'll probably here suggests that this is the knock-on effect. Is the growth going to be around this country as much as we thought anyway? Is that going to be tempered a bit? And when these things. The retail sector that sort of will generally suffer, one thinks, but Halfords is bucking the trend, certainly so far. A lot of green at the bottom on this chart here suggesting there is buying going in and behind this share. The long-term chart looks okay. The falling levels are going up. The chart itself was slightly extended in April, May, cooled off a bit, now moving toward higher ground. And looking quite good against the indices. It's looking good, Giles, this one. So